All right. Good afternoon, traders. Welcome to the Thursday Bookmap Academy meeting. I do this every Thursday. So we have coaches in here. We have Bookmap Academy members in here. And it's over on our Bookmap Discord server. Every day we have traders in there interacting with each other, getting feedback from some of the coaches and from each other about their trading. Let me just kind of detail out a little bit about the Academy, what it's all about if you're new. So just go to bookmap.com, click on the More button here, and then under Community here, you'll see Bookmap Academy. There's also a new affiliates page up here if you guys are interested in becoming an affiliate. Anyway, click on Bookmap Academy. And then this is where you can join. And when you apply for the Bookmap Junior Academy. You're an applicant. The process begins. You can read through it here, what it's all about. But it is a coaching and mentoring program to give you feedback. Once you meet some thresholds, you become Bookmap Junior Academy member. And then you meet a threshold there. This is kind of the testing ground then. Once you're in the Junior Academy. And then if you do well there, you'll be upgraded to the Bookmap Academy, and you can get Bookmap for free. You can also get the Global Plus version here. You can also get the MBO bundle, which would include the stops and icebergs for free if you double that quota. So you have to make these quantitative and qualitative thresholds. The next step after that is you'll be upgraded to a coach and you'll get data for free. And then you'll turn right around and help some of the Junior Academy members. So it's a supportive program here. Then you can become a Bookmap Academy streamer as well. That would be like once a week or maybe even more. All right, so that said, let's go through a couple things here. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. One more thing, a lot of you guys are taking advantage of this for these summer months. We're going to offer this. We'll continue to offer it. Get double the credit for your content and your posts in the Academy, as well as the Bookmap Blue Jacket competition. So all you have to do is show trading from the Bookmap chart. This is helpful for everybody because then we can give you much better feedback, not just for your trade setup and your markups, but understanding how to manage your trade better, which is really where it counts. So anyway, that said, let's get going here. And we'll jump in and let's see here. We've got David Blake and Stan. I have yours, but it's still kind of off with the some of the images in there. All right, well, Jack, we'll start with you, I think, and
Okay,
we'll go with Sharega here.
sounds good.
Yep.
So I talked with Cher earlier today, Sherga, as you can see here, Sherga does something a little different than most of the other people did, and this is something that, if you look in the Academy channel, this is something that we've really highlighted. Bruce has talked about it a little bit on the webinars. I've talked about it as well. It's kind of something that's really, really important when you're trading. It's You want to take inspiration from traders. You don't need to copy traders, right? And if you look at Sherga's visuals here, you see something that's completely different than if you looked at mine, than if you looked at Bruce's, or even if you looked at anybody else's. And really, it's quite important to have these kinds of concepts here because Bookmap is a customizable platform. Figure out what it is that you need to trade order flow. Find out, do you need to see the heat map specifically? Do you like to do that? And not just that, but you can add more of these features as you become a trader that become more experienced, right? So you can start with something like we see in this visual here, and then slowly but surely he can start adding some of that heat map volume here. Maybe he can add some of the liquidity thresholds for TraderMap Pro and other things like that. It's an incredibly important concept to think about that a lot of people forget, right? And it's make trading work for you. Take the things that you need to become a good trader, and to really improve on those things, and to iterate on these tools individually. Don't just take all the tools at one time and overwhelm yourself, because a lot of times we see feedback from users. It's like, well, I don't know how to use cumulative volume delta, the stops and the icebergs, and market pulse along with trading order flow. And it puts yourself in a really bad position when you try to take on too much responsibility at one time. It's a slow journey. It's a slow walk. Iterate through your process. We're here to help you with this stuff. That's what the coaches are for, right? Like, we're here to look at this, and we'll go over some of the order flow techniques here, and then to kind of like branch out on that. So once again, really a great setup here. What Cher is looking at here, Cher goes looking at here, is he's taking this higher time frame pattern and he's looking at that W pattern that he's got there. A lot of times you'll see W patterns or M patterns kind of talked about it from a technical analysis standpoint, and you're looking at for those continuations essentially of the legs of the W or the M. It's basically like the way I look at it, and I think Bruce has kind of mentioned this before, not to call out Bruce yet again, is that it's that two-legged pullback, right? Like, you get that pullback and then another little extension and then a kind of continuation push. And that's the way to kind of think of these patterns. What we could see in the order flow, now that we know his higher time frame here, he's looking at that CVD increasing, but also with his unique visual here, he's got a very unique volume bar down at the bottom. And this is a great way to see that increasing volume on the buy side, giving him confidence in his order flow direction, showing that he's getting that volume going in the direction that he wants. And then he's still got his traditional candlestick charts for his overall view, but they're within Bookmap. And you can do that if you prefer seeing those candlestick charts. There's a trader we covered not long ago that didn't just use candlesticks, but they also used footprints, right? And they used some of the footprint delta in their overlay as well. And you can see the way share price works throughout this image. Some of the big call outs here that I like to see that I think are really the most important parts of journaling here is, what's your strategy? What are you looking at when you're getting into a trade? And we can see that at the top here, ES long W pattern. It's in the same spot every time. You can clearly see what he's doing. You always have an idea. Then you see his trade criteria. And we'll get into somebody in a minute who is a good trader. He's iterated on this process, but he doesn't necessarily put this on there. And it's something that we're working on. You can see his trade criteria, and then you can see some of the different feedback in yellow that he gets and he gives himself. Now, the reason that this part is very important is because when you come back to this trade in 6 months, you're going to see the order flow differently because you're more experienced. You've had more time in your charts. So you want that context to remember what you were doing before. It's that inner monologue and documenting that inner monologue. And then we can see to some degree his entry here, his limit and his stop limit. Overall, this is really great image. It's a continuation of a process that he's been doing. I'm very, very happy with the way this is. And it's completely different than the way we see a lot of other traders use Bookmap. So that's pretty much all I got here. David, what do you think about this one? This is completely different than the visual you use.
It is, yeah. No, thanks, Jack. And I really love it. It's it sort of pimped my ride in terms of, as you rightly say, it's not necessarily copying anyone else. It's tuning how you want to see it. And the fundamentals, as most of you know, is that sort of VPA volume price analysis in everything I look at. So I love the way that we're looking at the yellow side, where that red bubble, that blip up of volume hasn't really shifted the needle, the dial, and so forth. You then get the aggressive buying comes in, and off the price goes. It's stuff that we talk about day in, week out, so to speak. So yeah, nice charting, short and sweet for me.
That large red bubble that you mentioned, it doesn't really move the needle, like you said.
No.
And kind of one of the ways you can kind of iterate on this process, like I said, like maybe he wants to include the heat map, maybe he wants to include some of the other features with
Yeah.
Bookmap, is he could be able to see absorption a little bit more clearly with some of these other tools. But right now, this is where he's at, and it just showcases that journey, right?
Yeah, that flip, and we've seen that a couple of times today, as we were chatting about before the Webby started, just into the last 30 minutes, where you get that really aggressive selling, and it flips 180. And as long as you've got the signals to pick that up, then it's I'll say a low risk trade. It's catching a knife, but yeah, you got your levels. You look at the volume, you see the switch around, and in you go. Yeah, with tight stops to follow it.
What do you think, Bruce?
I appreciate what you guys are saying, and I like the kind of pared down chart. And I mean, I can even see like an algorithmic trader kind of looking at it this way, maybe, or like more of a a systems trader. But I mean, for me, it's like, well, without the heat map, what I mean, that's where Bookmap really shines. So I look at this and I see those big red dots at the bottom, and I want to know, like, okay, so it looks to me like either there's a huge iceberg on both of those legs, or there's really high liquidity, and it just failed to drop. Then, I mean, and that would help me, and that's just
Yeah.
I prefer to look at it that way.
I think that's kind of like the next iteration in this kind of process, right? Because you talk about when you mentioned like slowdown and kind of like going through like his 3 stages and stuff. I think that this is like somewhere in between 1 and 2, right? And then at some point, like you get further, like I said, with those tools, and you can start looking at some of these other areas. I definitely think that this is a great way from a pattern trader to get into order flow. It's definitely different than, I think, more than you or I have necessarily done, where we look more order flow and then look at patterns, right? Because you and I, like, we really like liquidity. We really like to see the absorption, the icebergs, and things like that. So I think it's really good way to look at the other side of the coin and still be able to flip it and expand and kind of iterate on your process. Yeah, makes sense.
Stan.
Same to you. I would obviously say to wedge the liquidity, but I understand too the Jack's point of view. Yeah, makes sense if he's just trying to incorporate settings in his trading. But as you said, yeah, I think liquidity might really give you more information about the price action and the order flow. Yeah, for the entry or to stop, but still, yeah, that's great to see. Like he's posting and trying to identify things. So yeah.
Yeah, it's one of those things. I think it's a great little. I think it's a good stage 1, stage 2 area, right, where you're integrating from just looking at candlesticks, right? Because candlesticks give you great information, but they really only give you open, high, low, close, right? Like you can add some volume to it, but you're really not seeing like price action. And one of the ways that Bookmap shines, not just in liquidity, is that you see that price action over time. You don't just see the candlesticks open, high, low, close. You see those here in the image, but you also see kind of that more choppy action over the course of the last, what is that, 2-ish minutes, it looks like, from where that red dot is. So you can get more information there. And I do think that the next step in this trading evolution for Share Guy is to kind of expand on that. I would recommend kind of just stepping into the heat map a little bit, or toggling it on and off, and then kind of justifying what you're looking at here, especially in replay mode, right? So like, one of the recommendations I would have to try to get more into the order flow that Bruce is kind of mentioning and Stan is kind of talking about with liquidity. Look for your pattern, keep your image the way it is, but then once you find your pattern, once you find your image, pause, right? Because you're in replay mode. You don't have to worry about time. You're not in a crunch. You're not trying to like crush your trade out right now. add a little bit of heat map, see what you see there, and then document what you see there. Kind of take that back to step one where you're documenting what you see there. And then over time, you'll be able to move that from step one to step two. And while you might move your current iteration from step two to step three, you can kind of bring in more of those liquidity order flow elements. You can start looking into absorption, exhaustion. Right now we see price, but we don't necessarily see bid ask spread, right? And those can be really, really important tools to your overall trading. So I think that that's kind of the next step that you're really going to want to go through as you feel comfortable, right? Like this isn't a race, it's a slow walk journey. So work into these tools, but they are something that you're going to want to experience at some point. So that's pretty much the most I had there. Does anybody have any like final words there?
None for me, thanks.
Oh, perfect.
So now completely different visual.
Excellent.
We got my boy Vinny V. So Vinny V is he's a fan of the Scott's Tools indicator. He also really utilizes CVD in his process, but most importantly, he does a checklist. He's got his date and time. He's got his checklist. He looks for his entries. He shows where they are. He'll show them before they actually get there. You'll see them in the next one, I believe. He also looks at his higher time frames, and this is really great. We can clearly see on his chart where he's looking to enter, where he's looking to exit, and looking at that liquidity. And he's using the tool from Scott Zones absolutely perfectly. In this one and the next one, Vinny, I've got kind of a double feedback here. I'm going to go through both of your setups, and then you can talk about both of them at the same time. But finishing up with this one, with InQ, and I've mentioned this a couple of times, I really think that you're at the point where you should be looking at TraderMap Pro in a third chart and pull it out and put it a little sideways, okay? I really think that you're going to see things a little differently when you start using those filters, and I think that it can really give you a lot of good insight. I think especially like on this particular trade, you hit the 962 level really well. I think that if you are going to be like scaling and using partials and things like that, the TraderMap Pro tool will really help you, because you could see that liquidity down at 950 and you could have maybe got, another 12 points out of this, right? It's pretty great there. Before we get Vinny in here, can we go down to the next trade real quick, because it's kind of more of the same, and then we can talk about both of them at the same time, Bruce? So this is a two-parter. We'll look at the first part here real quick. Really great here seeing picture-in-picture, right? Vinny posts a lot of these on Instagram, but he also keeps them in the Bookmap channel itself. And we can see where his targets are. He's looking at it. So not only is he using a Bookmap Scott Zones tool, but he's looking at potentially like where some of these other targets are. And it's always important to look at where potential targets are, not just where your strategy is, but looking at the market as the market's evolving and seeing maybe where some of these other tools can kind of lend some support and lend some help. Tools can lend some support. Oh, I hear somebody background. Aside from that, looking at that liquidity there that you have there in the 930 level, what you'll notice in InQ is that kind of bracketing liquidity there. That is always going to be there, but that's going to move constantly. This is one area that the TraderMap Pro tool will have. You'll be able to filter that out, and you'll be able to see like a true area of liquidity there, as opposed to the bracketed InQ liquidity that's just basically market makers bracketing the markets there. We could see really where he's looking at with his after. So we see this is where it's kind of an in-process trade, right? Like, so he's looking to get long and then looking where it's after. If we can go to the next image real quick, Bruce. Small little thing here, Vinny. The orange box on the left, that's typically where your entry is. You didn't mark it as an entry, but I've looked at enough of your charts over the weeks that I know where your entry is. You might want to add that to your little image there, buddy. But you can see that bracketed liquidity here. You can see that kind of in process. You can see his overall target. And you can see the Scott Zone support. So you can really see all of the elements of his trade here and really where he was looking for everything. This is great, in my opinion, for a couple of reasons. One, he's looking at a 15-minute time frame here. As you look at this particular image. The previous one was a 5-minute time frame, right? A lot of times what we'll see is traders don't want to utilize multiple images, and they'll shrink things down really tightly, and you lose a lot of that nuance. Vinny does a great job here realizing that that could possibly be a thing, and he breaks it out into 2 images and just links both images. I think that that's a great way to handle this kind of problem, and I definitely would recommend doing this for other traders. This is a great example of what to do. Using some of those picture-in-picture elements, using some of those call-outs, and having secondary images to kind of show the continuations and some of the other things. But that's the bulk of what I had here. Before David comes in, Vinny, what are your thoughts? Preempted you there. Switched it up on you, David.
Hi there. Yeah. Hey, David.
How you doing, Vinny?
Yeah, good. Thanks
Vinny.
again, Jake. I tell you, you guys are really great teachers to get me to this point. So thank you.
No, man, you're doing the work.
Thank you. Yeah, you hit it. Well, we can go back to the first slide, and I can talk about that really quick, if that's okay.
Yeah, right there.
Yeah. Okay. This was, this just happened today, actually. I was watching exactly what you said. I was watching it consolidate there right along the Scotty zone. And then I was just waiting. Sometimes you just got to be really, really patient. And so, and sometimes, I may not get the full, 50, 60 points, but I try to make sure that, and that was one of the, I don't know if it was a fault, but I needed to make sure that I exited the trade, because sometimes it doesn't really get to my precise mark. So rather than, 50 points, I'll get out at 45 sometimes, because you just sit there frustrated. When is it going to move?
There's nothing wrong with front running stuff. There's a lot of times where I'll front run things, and I know David does as well.
Okay.
Don't.
But yeah, you're right. You're right with the entry. I did put the entry there, and sure enough, it really dipped really nice. I was watching this like a hawk, and this one worked. Would you like to go to the next one? Do you have any questions?
No.
Okay. Would you like to go to the next one? All right. Thank you. This is another one. Yeah, consolidation. This is a pretty big deal. I think you guys mentioned this as well. We want to try to keep an eye on, before the move happens. So I'm just thinking a couple of steps ahead, and consolidation is the best part of, before a move happens. And I just waited some of the signals that showed, and sure enough, that you mentioned, there's your Scotty zone. And I know it was talked about the Fibonacci's before. And so you're right. I did put a picture in picture, because I know at times I haven't been putting them in. I just been saying that they were there. But this time I did put it in there. It's kind of tough to see in the top left, but that rectangle is the 127 Fib. And then, you just sit there and you just watch it get there, and you have all the signals. There's your front run liquid that you had down there on the right hand of the screen. And as the trade was progressing, as the time was moving forward, there was more front running liquids that popped in there as well. So it kept me, pretty confident. And with conviction to hold on to the trade to get to the liquid area that show. And then on the bottom right there's the after, so it made it up there. Actually, I think it went even higher than that, but hey, I'm good, and I suppose I could have held on longer, but I didn't.
That's good.
Okay.
That's good. I think that was perfect. I don't think you necessarily need to go there, Bruce. In that after section in the bottom right there, where that big green dot is, just to the left of the word after, can you highlight that liquidity, that horizontal band of liquidity right there to the left? Yeah. So what you'll see is around where price is, you see how there's that bracketing of liquidity there. TraderMap Pro will allow you to really reduce that band of liquidity so it's not visually there, and you can run this like in a side-by-side chart. But that band of horizontal liquidity that you see right there will stand out. And that's why I think that your target where you got out at is a great target, because like I've looked at the NQ chart a long time, so I recognize it really off the top of my head, and Bruce does too, right? And it really shows up really, really well when you filter out some of that liquidity. And it's really kind of a great tool. I really think that that's kind of like we were talking with Sherga the next step for him is to kind of like add some of the heat map flow. You've already got that, right? Like your next step, I really feel like is kind of branching into that trader map and using it as an auxiliary chart off to the side, because you'll be able to really eliminate a lot of the noise essentially. So that's kind of where I think you go. David, this is why I waited for David to talk here, is because David has started to wade back into the NQ world. And I think he's got some great insights here.
I have been, yeah. I sort of got to sort of eat my own dog food and so forth. I've been conscious when I'm rambling on here and trying not to swear like a drunken sailor that if I'm going to talk about an NQ chart, at least I should be trading it. So I have been doing more NQ trades this week, as Jack has seen. If we go back to the first chart there, Bruce, please. What was interesting on this one, and this is old school, you have to respect I'm old school, but look where we are at 19,950. This is the thing, you'll all have read it. Often institutional traders and their like will often just be lazy and use those sort of round numbers. If you go and look at an NQ chart in the past hour, everyone, the price scooted down in the last, 15, 20 minutes, and it nailed 20,000 before doing 180, and it's gone up, I can't see the chart in front of me, but at 80 points back up. So always be conscious of those round numbers. Don't necessarily trade from them, but that 950 is a classic. And you can see on that 20,000 as well on this chart and so forth. So I do keep those in my mind. I like the picture-in-picture that you're using and so forth. In terms of scaling, how much scaling are you doing these days, please?
Do you mean like contracts?
Yeah, in terms of,
or are you just all or nothing?
Yeah, legging in, legging out, scaling in, or?
I really haven't legged out at all. I might trade in there, and there have been at times where I added to my position as well. But most of the time, it's one contract, several contracts.
Yeah,
I think So yeah, so I really don't scale out. That's probably something I ought to do.
If you're comfortable.
I'll make sure I try to get out.
Yeah, it does. Yeah. Okay, sounds good.
Yeah, it takes time to scale it out. Don't feel stressed and rushed to do so. Like there's nothing wrong
by
with
us thugs.
It's just a general question.
Okay.
Yeah.
Kind of going to that 19,500 or 950 line. If you look in Bookmap in the COB, like you can really see the amount of liquidity there, right? Like you can see 107 there. Like it's a very large level. Like that's a very attractive level to front run. I don't know how low. Like it's hard to tell with your scaling how you scale your vertical chart as much. Whether or not we ticked into it, but it's very likely we did. Generally, we do. We touch it a little bit, but they can be great targets for front run there. So like what you could do is kind of going to get to the scaling concept. If you have multiple contracts, you could exit the bulk of your contracts at your initial, but let's say you have like one contract left over, leaving that runner for more passive liquidity that kind of stands out there. And then from there, if it doesn't work, you can kind of exit out or trailing stop it or something like that.
Sorry, David, if you got some background noise there, I don't know if it's possible to turn it off or just mute when, much better. Sorry.
But I think that the overall liquidity there, I think that's a really good target. If I had multiple contracts on, I would pull off the bulk, but that liquidity at that level right there, it sings to me. It makes me want to try to see if I can front run it a little bit more. And it's only 12 ticks in queue there, but that's something that I really think would stand out a lot. And TraderMap Pro, I think, would really do a lot with that.
Yeah, thank you. I think I'm going to go ahead and incorporate that. That's great advice. Thank you.
And you don't necessarily need to like use it straight away. Like I said, with all tools, you should watch the tool while you're using your current strategy and see if it makes sense to add it, right? Like if it makes sense to add it to your actual executions, right? And sometimes it just gives you more information. Sometimes it may be not helpful, but incorporate slowly, work through the process slowly. Like it's not a rush, right? So Bruce, did you have anything here, buddy?
Yeah, well, first off, I just wanted to echo what Jack initially started with, Vinny. And well, first off, you've been doing really great work,
Thanks.
and kudos to you on that. And you're posting a lot, and it's showing. I mean, and these images are great. It's great stuff. And then Jack, what you said, he's got a checklist. He's
Yeah.
also got the date. So, like, we're journaling here, but you got to think in the context. So you brought this up when you first started, Jack.
Yep.
Was you're going to look back at this and you're not going to remember the context, and put something in there, the date, or maybe something else, like to remind you. You need something, and you've got it, which is really good. And those are my main points. Other than that, like, you're trading it from liquidity to liquidity, breakthrough liquidity down to liquidity. I mean, it's great stuff.
Bruce, a quick question in YouTube chat. I think that you'd be the best person to ask for this. Was there a workshop with stops coming up soon, or do you know anything
Oh
about that?
yeah, we just had it today.
Okay,
It was with Axia Futures.
got it.
Uh,
Is that gonna be in the YouTube archive?
yeah, we've done two webinars with them, and we want to put it into a playlist for you guys. So look for it soon. We'll let you know.
Got it. Got it. I'll make sure that gets out there. Okay. There you go, Miles. That's the answer to your question there, buddy. Bruce, I appreciate that. Yeah, I think that you echoed everything, Bruce, dead on. I really like to see that all of these kind of checklists, the dates, and really like being able to reference these things. I think they're incredibly important. Um, Again, I've been trading for a very, 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 very long time, and I document almost all of my trades, almost all of them. There are some where it's like, okay, yeah, I didn't document for like one trade here or there, but I have entries and exits and pictures, and they're just in a giant archive, and they get saved in two different locations. They get saved on the cloud, and they get saved locally. And I go back and I reference these things. I go back and I go to replay, and I'll replay a day. I'll just, what I'll do is I'll pull up replay, and Bruce kind of went over this a couple of days ago in an extra session. I'll pull up Bookmap replay and then just randomly pick a day using a day generator, like a little pick a day generator off the internet, and I'll load that day in my Bookmap, and then I'll just randomly point to a part of the day, pause it. Once it loads all the information, I'll scroll back, see what the context for the day was, see where my overall levels were, and then I'll play the day and I'll trade that day. And then at the end of that, I'll document that and I'll go back to my archive and I'll see if I did something different. I'll see if, maybe I missed a trade, maybe I missed some order flow, or maybe I saw something that I didn't see the first time that I now can recognize a little bit better. That's how you get better, is iterating through the process, not just journaling the stuff, but going back and reviewing the stuff, testing yourself on this material in your own way. Every trader is different. Shergaw's trading is different than Alan's, is different than mine and Bruce's, right? So this part of journaling is part to make you grow, and that's really the biggest part. But that's really all I had here. Stan, did you have anything here, buddy?
No, I think you cover all the main points. I would maybe just say to give a shot to make some trade through Bookmap, and maybe give us more information about your money management. But still, that's perfect.
Yeah,
Yeah, and
that's a good
you
point.
can you can also document that. You don't necessarily need to use Bookmap specifically. You can document how your risk management was if you move your stops and stuff like that. Some people prefer their own platform and stuff. So, kind of echoing what Stan says, another area of any that you can kind of iterate on is if you are making entries and exits in other locations, did you move your stops? And if so, why? Did you move your profit targets? And if so, why? Kind of go into
Exactly.
that. Yeah.
Yeah,
That'll give context for that.
and so maybe put a trading journal with how you, yeah, exactly what you are looking for, where you stop be, and even like if it goes in your favor, when would you consider to lower your stop, or all the management that you might be considered in your trade. I think it's a good thing to set it before. I think when you enter in there, all your plans should be on the table.
I agree with that
But
wholeheartedly.
that's my point.
Yeah, I want to remember that in a minute when we go to the next guy. Go ahead.
Yes, just a couple of quick points on that. What I actually have is a trading platform that I'm using that actually gives a bracket. So what happens is when I enter a trade, it already places my stop automatically,
Yeah.
and with the monetary value, and also a target with a monetary value. So what I'll do is I'll go ahead and maybe readjust the top value because it's already preset. So I
Yeah.
may adjust the top value higher based on where the liquidity is, or also where a Fibonacci is. And sometimes they really line up really well, both of them. And so that's what I'll do. And then sometimes, it just doesn't quite get there. You get a little frustrated. You miss it by a point. You're like, listen, I'm good with it. Let's just get out before it even, a point. I just don't want this thing to collapse and I lose all my, a lot of my my gains. So that's what I'm working on even more, if that makes sense.
So kind of going into what Stan's saying there, I think that on your charts here, kind of like on this particular chart that we're looking at here on the left-hand side in that blue area, obviously you have your bracket, like whatever your bracket is. Let's say it's, I'm just arbitrarily throwing numbers out there. Let's say it's 15-15, right? Like 15-point profit, 15-point stop loss, whatever. If you adjusted it, why did you adjust it? Specifically, what are you looking at that made you adjust it? Is it the fib? Is it, order flow? Is it some liquidity? Adding that information is exactly what Stan's mentioning here, right? Because again,
I can do that. That's great. Great advice. Yeah.
Because again, it's that journaling perspective, right? Like when you come back and look at it, all you know right now from this image is that you took 45 points, right? But did you move something to get that 45 points, right? So that kind of context is missing here. And so if you do make those adjustments, I think it's really good for yourself and your journaling to add that in there. And you don't necessarily specifically need to do it in the image. You could do it in text format. Like some of my information is more text as opposed to directly on the image because I don't want to clutter my images too much. So figure out how it feels for you and how you can use it to iterate and grow on, right? So, but I think if you are moving those things, I think that echoing Stan's point, it becomes infinitely more important because you need that context later on, right?
Will do. Definitely. Thank you very much. This is terrific advice. Thank you, guys.
Perfect.
I think that's all I have for Vinny. Alan's next. If we want to go to him, I think is he here? He should be here, right?
Yep.
Yeah, he's here. So Alan and I talked a little bit, and you can kind of read some of this in the, I think it's futures chat. I don't necessarily know if it was in the Academy's chat. I think it was in futures chat. But Alan, long-time trader, and we've been working through a couple of different things, and Alan's been progressing through this process for a long time. And there's something that I really want to focus on in this particular image that I think is incredibly important with respect to journaling. And it's the inner monologue. And you can kind of see some of our conversation that we talked about in the futures, because again, it's that context that matters, right? So Alan has, his standard setup, and we're going to be working on kind of going through his checklist and some of the other things. And you can see his entries and his exits, but he does a lot of intuitive stuff that he utilizes and rationalizes with inner monologue. And what we see here is that inner monologue coming into text form. This is very, very important, especially for Alan, who's still working on kind of like making that checklist like empirical, right? Kind of like having that set checklist that, we saw with Vinny V, right? So
no, I have it like when you drive, like certain things you automatically expect by rote. So some of the things like you just automatically, like from watching that, okay, this is probably gonna happen next and that, and you don't actually like, what's the word? You're what's the word?
Empiricize.
Okay, yeah, empiricize, whatever you said. That sounds better. I was gonna say like not ignore it if there's a word, but you beat me to it. So empiricize.
Yeah.
See.
And it's an iteration. Like, I mean, it's gonna take us a little while to go through it. But I mean, you've been working on this process for a while, and it's working. It's going in your favor right now. So like, it's like trading is that kind of step-by-step process, right? It doesn't matter, if you're in step 1 or step 55. I'm still working through through processes. David works through processes. Bruce does stuff, right? We're all evolving, and this is just one of the next steps of your evolution. And I think that this is really great. I really like to see this from you, especially because right now you do lean more intuitive as opposed to like specific checklist criteria, and we'll work on the checklist criteria. But while we're working on that, having your inner monologue in text, I think is going to be great for you from that journaling perspective.
That was the main point of this trade, really. The inner, like I was trying to think where to put it, but I guess close to where the entries and exits were, because this was really close to being stopped out. It was like maybe a point, like yeah, it was like almost there, and then it was strange because I wrote in there I heard the sound for the VPI like go up,
yeah,
and plus the face of tape. It wasn't going that fast, but it was going fast enough. But I kept hearing I guess I usually I attribute those to like profit taking, because they're probably like when it's not the pullback isn't so crazy. I attribute it. I mean, I don't know what it is. I don't want to say this definite, but it's usually like profit taking because eventually, if there's a significant move, I'm sure the algos are programmed some to take longer profits, some shorter profits. So
yeah, and we never know what another trader is doing. Really, all we can do is kind of like use what they end up doing to kind of like iterate through the process. I think that this is a great step. You're already well past, and I talked to Bruce about this, and I've talked to you about it, and I've talked to others. You're well past just having basic order flow stuff on there. I think we need to get really like more into the weeds and like this inner monologue, because with this inner monologue, we can really start like locking down some of those like checklists that are wrote to you and making them more like step-by-step kind of stuff.
Yeah.
And then from there, because you do a couple of things a little differently based on what you see, right? Like you have like an if then do this kind of thing. And sometimes it's kind of a little different. And if we can really kind of like work through that inner monologue and we get enough iteration on it, we can build out that kind of like checklist.
Well, actually, like you said, like inner monologue by eliminating an inner monologue. I have that Brooklyn accent and I talk fast, so by taking something out, I actually added, and that was like I know most professional. I don't know. I always think a professional trader knows better than me, but I like start off without a bias, so you're fluid. Like if also like because before I used like, but this happened, and that happened externally, and like I don't know, Trump. You remember what? Well, not the Trump, because then it really went down. When he would say "screw you, China," and then that. You remember those days? Like
yeah, you get a lot of noise.
Yeah.
Yeah.
So was this him before? I forgot.
The inner monologue kind of helps you overall.
Yeah, overall, because
yeah, I think it's really important.
Yeah.
I think that's kind of like the next step, and then from here we can like really work on like fine tuning some of this. I think going forward, I really want to see these kinds of things. That way we can start working on some of the checklist patterns, some of the things that you're specifically looking for.
Do you know, or Bruce? I'm sure Bruce. Are you able to make your own? Like, I want to make my own like that short squeeze. I just want to make my own checklist. Am I able to do that on the checklist thing, Bruce, on the screen?
Yeah. We'll go over it tomorrow.
Well, maybe tomorrow.
Yeah. There you go.
Yeah.
I
know I was looking and I couldn't find it, but I think it'll help a lot of people.
I'm pretty sure you can. I've messed around with it a bit, and I added some stuff to it too. So I'll try to be there tomorrow too, and in chat and help out. But yeah, this is great. This is a great step. This is what I want to see. I want to see you continue pushing this way. I'm going to push you hard though, buddy, because you're improving. Look at where we were last year. Look at now. Like this is heads and tails way better.
No, actually, today, like how I always read some days. You read these books and they say some days you shouldn't trade, and then you say, okay, well that happens. I'm not going to trade. I'm just. There's a saying: trading is simple, but not easy. Like
it's
the
simple to push
a
buy and sell button, but it's not easy to do it.
Also simple. Okay, well, if I lost that amount, you sell. If I make this amount, you sell. Like also, like the factors. I think greed's always going to play in how you control these things and how you able to. Like you have to always factor in the human factor. So that's always going to play in. So you have to like learn that you're not going to be like a machine. Like you're going to make these mistakes, and
every trader's different, right? Like Vinny mentioned, like he wants to take his profits a little earlier. I lean that way as well.
Me too. It's not worth
David's
it.
aggressive with his entries a lot of times, especially early in the morning.
Always, yeah.
Right? So, like,
Street fighter.
You know,
everybody's different, and it's
David's from his own
us.
planet, so we can't listen.
Little big planet.
But also, like when you see like Bruce, like when he goes over his webinars, and he can talk about this way better. When he goes over stuff, he narrates a lot of stuff, and we see Tom B narrate a lot of stuff, and they're narrating different things. Bruce is, looking a lot more at like the liquidity and the microstructure, and he's looking for a lot of if then this kind of.
Those are the main points of Bookmap, so people can start like understand.
Yeah,
Bookmap.
But that's also how like my mind works, and I know Bruce, like he's not just narrating it for Bookmap. That's how he views things. Like, I mean, you can really, like, when you have those long talks with Bruce about market dynamics, and I wish everybody got the opportunity to do this. You really should listen to his webinars. You get those kind of concepts. I meant you as in everybody. I think it's really important because it really helps you kind of like develop that picture in the market and kind of understand where things are going and where things can go and kind of visualize things. That's how I developed my impulse reaction type of looking at things, right? And that kind of stems from my two-legged pullback stuff. So, and Bruce could talk more about that.
I wanted to finish what I was saying before. That today is like the first day. I didn't wake up early enough to like go through my morning checklist, and I said, "Well, today I'm not trading. Screw it. Like this is me a million more days." You didn't.
Good man.
You didn't get up early enough to go through like every single thing, and I don't want to just like get into the habit of, if you didn't go through your routine, I want to get in the habit. Okay, you didn't. There's been plenty more days if it didn't go your checklist, because usually it ends up bad for me. I don't know. If I didn't go through all this,
there's nothing wrong with being disciplined. So yeah, I totally agree. But that was most of what I had. If you guys want to see some of the conversations that Alan and I had, the YouTube channel is down there. I also talked to Sherga as well.
The ones that are G-rated, the ones with David, I can't show anybody. But the G-rated,
you can't with you and me, mate. No.
Bruce, did you have anything?
No. Well, first off, thank you for the kind words, Jack. But first off, this Bookmap Academy is for you guys. It's to open the mic for you guys to have to talk about your trading, so we can listen and then we can give feedback. And the All Markets webinar that I host on Monday, Tuesdays, and Fridays are meant to be a foundation, just like Jack was saying. It's to understand like how these markets work, understand the market mechanics behind it, and really what moves the market. This is a foundation and a base. Then once you kind of maybe forget everything else, but then focus on that, then the world's your oyster after that, because now you have an understanding of what really is behind some of these moves. Then your indicators, all the other information and education you have should make more sense. And we have, I don't know, 20 something streamers with so many different styles, and that's some of our goals here with the education.
Can I just say something for 2 minutes? So this weekend, actually, it was Friday after trading. My computer, a lightning bolt zapped my modem, and that ended up. I found out the next day, if you ever have a lightning surge point, then you don't have a surge, like a really good surge protector, like a lot of joules. The Ethernet wire, the electricity can go through the Ethernet wire and fry the motherboard. And it doesn't matter if you have top of the line Apple. Yeah, the better it is, it might be harder, but just a little bit of electricity. We'll get into that. So it's not part of the trade, but there's systemic risk and then there's non-systemic risk. There's so many things that are non-systemic, meaning it's not part of the up and down of the market. It's all the other things, like you need backup batteries, you need your broker's number. So I was out of commission like Monday and most of Tuesday because you had to start reinstalling. So what I advise everyone is make sure you have your backup stuff. So because maybe while everything's going, just takes one day for things not to work and you start to freak out, and God forbid you could lose your account or something like that. So Yes. Good. The little good thing is that happened Friday after the market closes. So by the time it came in, it was working. But I had to wait for the computer to come and reinstall everything. And you guys know how that is. So just advice is that
Yeah, I mean, I
like
had
when you leave the house, unplug Ethernet ports from anything. Just unplug them and unplug as many things as you can. And if you don't need Wi-Fi, even unplug that. What were you saying, Chuck?
I mentioned yesterday while I was documenting everything after the market. I had a couple of really good like organization and everything. I hadn't closed and saved my Bookmap platform yet, and I had my images and everything organized. And we got one of those classic Texas blackouts, right? Like it happens
Right.
occasionally, and we lost power for an hour. So that's also a
Right.
very good reason. A lot of people don't necessarily know this. If you've been a veteran trader for a while, you probably do. But one thing that I recommend is whoever your broker is, whatever instruments you're trading, whatever
Right.
it is, have
Have a
their
stop
emergency
loss.
trade desk available on your phone in your favorites, right? And if
Right.
you have an
Exactly.
issue,
Right.
it's been a couple of years since I've had to do it, but it's better to pay the $20 fee to close a position and not lose, hundreds of
course.
thousands of dollars. So
Who's
have
your
those.
broker?
Well, I have a couple, but I would
Is
always
there one
have
better
your.
than the other, or all this just
It
cost?
just depends on what it is. I would always have your emergency trade desk number available.
Definitely, yeah.
Because you never know when you need it, and make sure that it's in your phone because you can always be able to use that. So
Yeah.
kind of going along that, but that's more of a safety thing.
Maybe you sound a little bit like a creep. I don't know if you did your microphone.
What, me? Oh, hope not, Alan.
You sound like a creep all of a sudden. You just say
I have
something,
to
and
step out.
now you
I have
sound
to
like a
do some
weirdo.
bad duties. I will let David and Bruce take the rest, guys. I appreciate it.
Okay, thanks, Chuck.
Good stuff, Jack. Good stuff.
Yes, as always. No, something seriously happened. I don't know. Now it's like super loud, your voice. I don't know why.
Yeah, I've been playing around with the noise suppression as Bruce mentioned. There's a story flicking between sort of Teams and Zoom during the day, and then coming onto Discord and so forth. But yeah, wise words in terms of backups and so forth. There, if I quickly ramble, all my, whether it's the modem, everything else has all got battery backup, UPSs on them and so forth. I've got 3 types of data feed. I've got 5.
UPS is the best, right?
Yeah, I got DSL, and then if that failed, I've got modems, a 3G, they go 3, 4, and 5G modem.
Yeah.
So I've always got that. Then I got my phone, and I got the numbers in there just in case technical.
You don't need top of the line stuff. You just need something.
No, you don't.
To get into your system and just flatten everything out. You don't need to get the.
You don't.
Yeah.
And what, easy to talk about, but so my trade workstation, my big PC, the previous one, when I upgraded it, that still sits around as a backup. So it's ready to plug and play. Sure, it'll need some updates, but that could get going within a couple of hours if I needed it.
Couple hours. Yeah, that's all you need.
Yeah.
Just unplug stuff during electric storm. Just unplug stuff, guys, because you don't know what is going through that in the middle of the day. Thank God the market wasn't on, but everyone, like Jack said, a veteran trader, has been through that, and it's really not. It's the opposite of fun. Whatever.
Very much. Bruce is going to say, "Is this a Radio Shack Webby, or are we going to get back to Bookmap?" Aren't you, Bruce?
No, but it's important because money and if you haven't gone through it yet, then you don't know. So
you don't know. Agreed.
It happened to me, so I figure I share with others to avoid that. All the problems that I happen to me.
Good stuff. Great stuff.
Back to Bookmap. On to you.
So let's we'll get Stan up and Stan actually
I don't know if you can. Maybe I send another one.
You did. Okay.
Images will be better in there.
Yeah, let's try this one. There we go. Oh, much better, Stan. Okay.
Yeah, perfect. So we'll go through the antimeters. First of all, I will say then it's great to see like your kind of journal, all the things that you were looking for, several images with the context, all the elements in there too, like the order flow, your higher time frame, levels. Yeah, that's very great. I would just think about like where would you take in there? Because I think it was only for catching some important order flow things, but I think it will be a great things to try to enter the market and try your setup. So I don't know if you're there.
Yeah, he's here. And DNT, you have the mic, or you need to step up onto the stage. Accept the speaking.
I mean, like, yeah, we can go through the other one. So the other picture, he was more going about like the context, and I think very great, like how we identify like the huge anomaly about the order flow at the end.
Okay.
Uh,
So am I on the right one, Stan, or do you want to look at another image?
yeah, the other images.
Okay. So this
Yeah,
one.
sorry.
This one.
Exactly. Yeah.
Okay.
Yeah.
Okay. Great.
Yeah. So the other one was more a zoom view, and this one is the context. So
Hey.
hey,
Okay, there we go. Okay, how you doing?
yeah, all good.
Yeah, it's kind of like what Alan was saying. It's like you gotta your checklists that you gotta go through, and mean reversion is a nasty trade. And if you wait, this was yesterday, and it was pretty choppy yesterday. But if you waited, till the final hour, things kind of got a little more clear. And that was that first image that you showed. And I didn't hear what you said about it, but yeah, I mean, part of the mean reversion checklist, you know, is to come back, or part of mine is to come back at the final hour, kind of check things out. And
So yeah, this time you were looking for a long, or due to the context,
yes,
you were more two-side trade.
yes, looking for a long. Um, Spot Gamma has been really helpful for me to kind of put like things into context, like the founder's note on it on the Spot Gamma. It's really helpful with like the high, like understanding the higher time frame context and stuff like that in the options market, and not just the levels itself, but also to get like a larger view of how to trade it and what we might be looking for. So that's why I kind of mentioned something like an upward or low. The market opens, or they were saying something like a low volatility for the day, and it's possible we might see like a drift upwards. Well, at the open, the market pushed down to like this demand zone, kind of rejected upwards and went back into balance, and then from there the market kind of just chopped around the rest of the day. And then finally in the final hour of the day, we see some clean tests of these absorption zones. So finally, something like actually clean, and yeah, and then also I mentioned in the past, these absorption zones can get really confusing, and so I need to start prioritizing them and implementing them into a plan, and not really trading them as is, like for themselves. So I'm still having a little bit of trouble doing it, but um, waiting for especially in mean reversion, but waiting for something clean to come up, then maybe participating at that point. But the liquidity that aligns with the absorption zones is kind of helpful to see,
Yeah,
to prioritize which zones.
yeah. And so your potential entry in this case would be on the right in these images, where like the buyers just clearly try to push up. Or
Over here, Stan, or
yeah,
where?
exactly.
Yeah.
That's a good point, because I was kind of came back later. I didn't really come back at the beginning of the final hour. I was kind of just looking at it at the final hour. But by the time like 30 minutes went by and we noticed this upward drift really slow. Look at that, like over a 30-minute period, the market's barely gone up like from 28 to like 33 or something like that.
This area here, right?
Yeah, it's real
Yeah.
slow drift upward.
Yeah.
And by the time you see that and you're like, okay, well, I noticed this zone is being supported, and I noticed the liquidity there kind of helping push it up, and my bias kind of aligns with it. By the time you enter this trade, you're entering like in the middle again, and you don't really want to enter in the middle. So it's kind of it's kind of a thing where I don't know. It's a what is it called? Aggressive. It's an aggressive trade, and it's a risk that you put on. And I mean, I don't know if I don't really know how to trade that. And in all honesty, if you really want to be safe, the best thing to do is I don't know. It's up to you to make that decision. Really, entering in the middle on mean reversion, those can get nasty.
Stan,
So,
what do you think, Stan?
Yeah, but I find very great on what you said. Yeah, that's true. Then those bias came like right at the top of the range at this time. But still, yeah, I would say in this case, maybe, yeah, just give it a shot if you have like the liquidity below, really trying to push it.
yeah,
And then clearly, like I think, as you mentioned, the absorption just below, and you got a really strong conviction at this time from bias on the right.
and yeah,
And
that's a good point.
yeah, but
That's the mock imbalance, yeah,
yeah, and
and
so
no pullback.
I will just say, would it fit into your money management? Like, for example, even if you have an aggressive entry, what you want to see and what you don't want to see, where, like, for example, in this case, if really you see like big sellers coming, it's not what you are expecting there with this bias. But I just think you should try to take the trade, even if you are in
I
sim. Just try it
I agree. Yeah,
and
this
then
is much
work
more
with it.
clear, and I take way worse trades than this that are not clear.
Yeah, but still,
So
really,
I
that's
agree. Yeah, good
yeah,
point.
great
If I
thing,
had waited, yeah, good point.
yeah, and we can clearly see like in the other images how what happened after. Um,
And the next picture,
yeah, exactly. So obviously we would
and
try
this may have
to.
been a little more clear too, as well as with the higher time frame. But yeah,
Yeah,
go
and
ahead.
what might be giving you, for example, in this case, if you would take the long at the time where we got like the strong conviction, what you don't want to see, it's maybe yeah, on the right, Bruce, I think, yeah, uh, it was at yeah, where the arrow is, the purple one.
Oh,
Was it
Here?
like your?
the
Yeah,
aggressive
exactly.
buyers.
Yeah,
Yeah.
exactly. Yeah. And so what you maybe don't want to see, like if in this case you were looking for a front-run liquidity, obviously you don't want to see huge liquidity just pumping in your face when they are testing like the previous high. Um, so yeah, maybe yeah, take a look at the other flow when like yeah, I just want to say in your trading journal, try to make things when you are entering the trade like what you don't want to see when you are taking position and what you want to have if it goes in your favor, how you will manage your stop and when would you take maybe a early take profit. Um, but
Good point.
try to take the trade and just works on it and try to sort something from it.
Okay.
I think you have every point. You know exactly everything about it. Like you are posting a lot. You are here for a long time. just do it, and
This is good.
then excel in there.
Okay. This is
David.
good. Thank you.
Yeah, sure. No, great charting. So nice to see. More general points, if I may, Bruce. We all, well, a lot of us do enjoy Brent's notes, open bracket, other reports available from other providers, close brackets, etc., etc. That sort of, if I only did one Webby with you years ago, didn't I, Bruce? And I was talking about those sort of reports, and I view those still, any reports like that, as a sort of weather forecast. So they're well worth it. I know we all do get a feel of where the market could do, where it could go, but not nailing ourselves to it. These charts here, if I'm right on the time, again, they're going into that. They're going into the close. You get that dead zone, as we saw in the previous chart, as it approaches that sort of last 30 or so minutes. You can get a lot of fun and games going on. The volume drops off on the volume bars relatively. So there's some aggressive buying on the left. We went up to the absorption and then sort of fades back a bit. It gets a little bit cool on volume. And then as we get towards the close, a bit like today, I know I've said that a few times so far, but a bit like today, the volume picks up and off it goes. And I think, as you were saying, those trades can be, they're not for the faint-hearted. There's no denying that. They're not for the faint-hearted. And when I do take those, then I'm using, whether it's a trailing stop or whatever I'm using. It's less hands off for me and so forth. But Bookmap is fantastic there, as you're showing. You've got the upper liquidity area there. If I come back to the spot gamma that you rightly sort of touched on, as I'm sure most people know about this on the call here because they've seen Bruce and Brent talk about it. But those 0-day options that are expiring, I'm happy to be corrected if Jack was still with us, in that sort of last session of the day, really do have an impact. And so that confluence that you're bringing into your trading to look at Bookmap is fantastic. So well done you. And if you've got the opportunity to stick on some of those posts, these go onto Instagram, do they, or your posts?
From the Academy.
Okay. If you've got a chance to sort of bring in some other confluence to that, then that's really great for all of us traders to sort of understand how you're taking your picture to give you the support, lower the risk on a trade as to, yes, I went long here because I'm not just seeing it on Bookmap, I'm seeing it elsewhere. Back to you, Bruce, please.
Okay.
Good points.
Yeah, no, I mean, you documented a really good one here because it's very challenging. I would have kind of given up on it, I think, to be honest, because here you got, so it's going down. There's, I can't really see how much liquidity is getting filled in some of these other areas in here, but you have some pretty strong buy volume. Yet it dips down again. But look at, the way you've got your heat map filtered. You're just noticing or getting these really high areas of liquidity showing up, which is great. And they are getting filled in here. So all of these guys are on the bid down here getting filled, and they're still here on the bid getting filled or wanting to get filled at the same level. And what's weird though is after this volume, this is the reaction. Yet it's really kind of weird price action because then, as Stan noted, like, wow, something happened here, and now it's looking to go up here, and because you've got the setup, this is the odd part in here, it's just grinding, and it is end of the day or near end of the day, or afternoon, anyway, checklist wise, like you've got these things, is you just got this really dull spot, and then here though, you've got the fireworks, and this is where it started to pick up, and it certainly does, and then you got some really nice things in here because high liquidity, high liquidity, high liquidity, and high liquidity, and lots of high liquidity right here also getting filled, and even more up above, right? But it can't make it into that, and then look at them just get super aggressive in here. I mean, wow, and what's the reaction to that? Sellers, lots of sellers. So it's coming right back down to where it was. And these areas of transactions in here, it's just blazing right through them. So it's a really good liquidity play, and a really good example here. All of this stuff over here and up here.
And this, you're right about the first post. I agree with that. And this one might have actually been the cleaner trade. That also aligns with the context. Yeah, it's a good point.
This is the same thing, same trade, right? Isn't it? It's just later.
That's correct.
Okay.
Yeah, it's just like 10 minutes. Yeah, after the mock imbalance at 10 minutes before the close.
Yeah.
Yeah.
It's crazy because, like, God, I mean, you look at this here. Look at just the bars. You know, you can look at all the dots and everything, but it's just buying. But and you had all these buyers and liquidity getting filled in here. Yet this is the reaction. That's odd.
Yeah.
So that's very challenging. Nonetheless, though, I mean, you can see the order flow, like it held strong. You know, underneath they're bidding up here again. Then all of a sudden, I don't know, whatever shifted here, whatever made the market shift, it shifted, and it moved. So you were rewarded, but man, what a grind to sit in it for quite a while. Anyway, that's my comment on it.
All right, those are great.
Let's see.
Yeah, thank you guys.
Oh, thank you. Good stuff, DNT. You've got some
great stuff.
really nice documentation. And by documenting this stuff, look at the feedback we can give you. It's great. So I know you've been trading in here too. So more and more of that. If you could show some of those examples, you get twice the credit as well. So it's in your interest.
Sweet.
It's in your interest. Let's move on to Rob here. Yeah, good stuff.
Yep.
Really good stuff.
Will do. Thank you, guys.
All right, thank you, DNT.
Thank you for sharing. So yeah, we will go to Rob trades. So he was like initiator along first. So first of all, like he made obviously as usual note about his trade in a grade. So in this case, the entry was A, but the exit was F. If so, yeah, we had like his checklist, what he's looking for as usual. That's very good to have consistency here. We will see after a bit more in the detail what were there, but still he got like his confluence, and he took a long on the left one, on the left side. Yeah, exactly there. So yeah, his stop was set there. He entered. He scaled, and then he let a runner, and he got off at the end. So he was maybe wondering why, if he could lock his runner on the top right, like we can see in the other images. And it is what is great, like he will make more other view. If you go in the second pictures, what really happened in his trade. Yeah, exactly. So how we took down, and we can see like he took a first long on the left, and I don't know like if he can tell us why, like he took the first one and then almost took the stop loss, and I shifted a bit lower, and why you took this decision. I don't know.
Rob, do you want to? Yeah, he's in here.
Yeah.
I think he's just muted at the moment. He can't unmute.
All right.
Oh wait. I think server mute. Okay. You know what? I actually did that to you. I'm so sorry.
Cool. Yeah, you guys hear me?
Yes, there you are.
Yeah,
Excellent.
Yeah. Yeah, sorry, what was the question? I was trying to unmute. Like, why did I take that entry?
yeah, exactly. The first one on the left.
Yeah, so that was right after I was waiting for news to come out. So I'm on PST time, so 7 a.m. was 10 a.m. and that's when what was it? Housing news was coming out on Tuesday or something. And or Wednesday. What was it? Yeah, whatever news came out yesterday. And so I was watching to see what would happen. And so you had all those sellers to the left, that string of red dots around 659. You see all those sellers driving price down, all that high buying liquidity getting consumed. And so then when we got back to the top of the range, I was actually looking for a breakout. Yeah. And so I had that level marked as a key level. That's why you can see on the cloud notes it says PML. That stands for pre-market level for me. And so I was looking for a breakout. So I didn't get the most buying volume, which I typically want to see. So that's why I got in on the pullback. But I don't know. I just liked what I was seeing across the market. Nvidia, a bunch of tech stocks were rallying pretty hard. So I was fairly confident with the breakout. And so even though I didn't get the most buying volume, which I typically want to see on a breakout like that, um, I ended up taking a position. Took a small position, dropped my stop just a little bit, almost got nicked. And then when it rallied back up, I took my second runner.
Yeah, perfect. And so, why did you choose to lower a bit your stop when we like?
Yeah. So I've been experimenting with widening my stops. One thing I've noticed is that I tend to have pretty good, um, what's the word I'm looking for? Pretty good idea of what's going to happen at times when I have all my setup, all my criteria line up. And the problem that I've had recently is getting getting chopped before the move actually happens. And so right now, what I'm trying to experiment with is widening my stops so I'm not getting chopped out of my positions only to watch them run. So that's why I ended up pulling my stop just a little bit. And if it took it out, then I was just going to get back in again. But I didn't want to get stopped out and then get back in again and pay more commission, take the loss, etc.
Yeah, yeah. And so, where would you take your full stop in this case? Where would you consider then the chop is still chop?
I'm still determining that. I have it pretty figured out on the ES. But on the NQ, I'm still trying to figure that out really. I didn't really see anything order flow wise there when I moved my stop that would tell me I was wrong. I just kind of figured, well, it is pretty volatile. We just had news. The market's going to move pretty wildly around that, so I'm going to give myself some breathing room on that. In this case, I guess right there, just because that's how much comfortable I'd feel risking on that trade.
Okay, perfect. Yeah, just wondering. Yeah, and then he took the other long, so on the right, and then he scaled. Then we can see in the other images. Yeah, so he took the long, and then he got like his first scale front of liquidity, and you were looking for a potentially exit the runner in that case.
Yeah.
And so yeah, for that I will say, as I said before earlier today, maybe try to say how you would manage if you in function of what you will see. For example, yeah, you say that maybe in hindsight afterward, but maybe if you see like strong liquidity plus sellers that potentially came back, yeah, you might maybe not just front run the liquidity, but took overall your profit, or even like put your stop at break even, or or other things in your money management. Because it seems
Yeah.
like in this case you lost all what you earned, and even I don't know if you get a sweep at the end, or just you lower your stop.
Yeah, did I lower my stop? Yeah, I think I lowered it for some stupid reason. Should have just
And
left it where it was.
so
Yeah, I should have. I normally do. I normally exit like so where that second bubble that says should have exited my runner in front of this liquidity. I normally do that. I normally the way that I kind of view the market in terms of like a position is trouble areas where I think, okay, there's either a level that other people are going to be watching for some kind of reaction. So like think of like an overnight high, high time frame resistance, etc. With Bookmap, it's big levels of liquidity. My I think I noted it in a write up is that this was like a pretty big overcorrection from the previous day where I think if I get my days right, I think this was Wednesday. On Tuesday, I had a really good position and I was too conservative. And so I did that. I moved my stop to break even and it got tagged and then the market went to where my runner was. It's like, son of a like I just left like so much money on the table. So on this day, I overcorrected the other way and I put my stop way too far away. And so, yeah, that's kind of in general why how I manage trades for whatever it's worth. But yeah, I should have just left it as it was. But all in all, like I did give back most of my profit on this trade. The one good thing about this trade was I'm really practicing on just being calm in a trade and not like over managing it and trying to like get in, get out, because I don't know, man. Sometimes like look, I don't read liquidity all that great yet. I'm still practicing it, so I will shake myself out of trades, and I'm working on just letting trades run to where I have my targets and then leaving them alone. So this case, again, overcorrected. Should have put my second target there, and it would have been a great trade.
yeah, but, that's perfect if you already have your plan. Yeah, but still, like you got the order flow analyze. You are playing with it at this time. That's a good trade. If it was part of your plan, yeah, that's good.
Yeah,
I don't
and
know.
if you have any feedback on what you see in terms of the order flow, so like after that first entry, like is there anything there that should have told me, hey, you should probably get out of this trade? Besides like the big
So on
sell off.
the first picture,
No, that one right there. That you're looking at.
so you mean on the right, like what would you where would I potentially close it?
Yeah, so you see your first, like if you had taken this trade as I did,
Yeah,
and
I
you
would.
get your first exit right there around 20,000,
Yeah.
where would you be looking to exit your runner or your full position?
Hmm. Yeah, that's. But obviously, after my first target, I would put at break even, so I would
Okay.
be out after the first exit. Yeah, maybe on the right. So we got like our big buyers. So they took like the liquidity on the left.
Mhm.
Then they goes back. They goes above again, and then you have like a much a big red liquidity on the top.
Where are you? Point me where you're talking.
Yeah, on the left.
This one here, or
Yeah, exactly.
okay.
So buyers came there, then
Mhm.
they came back again. So in this case, you got your runner, and you are looking for something, higher. And then at the top, you can see like kind of top
Up
left. Yeah,
up here.
exactly.
Okay.
Yeah, exactly. Yeah, the liquidity become really, really red. You have your buyer, and then seller came back. I would potentially close over there.
Okay.
When I see like something going against me, I don't know, like when you have your trade, how long you will stay in there, if it's more a swing or any other things. But I think you want to move directly, like in a. I guess it's why you set a stop order. It's to catch the real conviction. So obviously, look, if I see like the conviction of the opposite side, I would be more more able to close the trade.
When you mean conviction, you mean the conviction of
Yeah, of the seller, like in this case, like, so we are long, and then yeah, when I see that like big liquidity, like not a normal one, came on the top, the sellers came, and yeah, I will close it. We never know
okay.
what could happen actually. So,
So
yeah,
you're saying that, oh, sorry to interrupt, but you're saying basically because you see sellers actually committed to selling into this move, that's probably
yeah,
not the best sign that this is going to continue higher.
yeah, at this time. So it will depend how long you are wondering to take it. If you just set a break even after your first target and you leave the trade, that will depend of your stats.
Got it.
So
Okay.
yeah,
That's good. Thanks, Dan.
pleasure. I don't know if David has anything to say.
Yeah, sure. If I can give general comments, if you don't mind, Bruce.
Absolutely, jump in there.
Thank you, sir. The first thing is the volume on this chart's quite low. Yeah, if I remember on the scale there, Bruce, it's about 300. So when I'm looking, and this is RTH, isn't it? So you've got the news coming out, as you mentioned, the print coming through. So it's not massive volume to be trading into. So that's the first thing when I'm looking at trading that time, thinking, yeah, okay, it's going to chop about, etc., etc. I'd also add in, I know a common conversation over the weeks has been perhaps move on to the micros. I love the way, and I do that, and you know what Jack's been talking about, analyzing your trade, seeing the what ifs. If my stop was here, I would have been in the trade, because we're often all do it, don't we? We know where it's going to go, but we get busted out, and then we're cursing like drunken sailors as the price goes off in the direction that we'd set the ship on. So you're doing your right bit of analysis of going, okay, I need a stop loss of 20 or 25 or 15, whatever it is. So maybe that theme of I'm just going to run some micros on that, run those wider stops, and then when it starts to go into my direction, I've got some market money, you know, so I'm positive for the trade, then start to scale in, leg in, move that stop up as Stan was talking about, and then just work from there would be my sort of thoughts. But the key thing on that chart is that lower volume for me, Bruce. It's not screaming, let's get into a trade. You know, if that was ETH 300, I'm there. But for RTH 300, I would. You've mentioned about doing ES. I'd flip onto the other chart and see if there's some action on ES to trade.
Is there for like a breakout trade? Is there any kind of specific amount of volume that you're looking for?
For me, it's relative on that chart as an example. But you know, say you look at the volume today, it would need to be sort of like 600 or so, at least. I say at least. Now, I'm sure if Jack sees most of my trades during the day as we share with one of them, and he'd say, "Hang on, David, you took a trade at 200 or whatever it was," and that could be the case. But I'm looking for a minimal volume in my mind based upon how the day's going, how things are going, how the week would be, of going, yeah, this just is not worth playing with at the moment. Otherwise, you are going to get chopped to bits. Now, as Bruce will talk about, I'm sure now on the order flow, you take it just as you say where you should have exited. We've got a nice green bubble, but it's pretty flat, and the price sort of comes back because there's no real conviction there. There's no pace of bids or pace of selling or something, Bruce, I think. What do you think, Bruce?
Yeah, I mean, well, first off, great discussion, and it's actually we had a webinar earlier with Axia futures, not to plug it, but like this is exactly what we talked about. So I think it'd be good to watch that, Rob, once we have it up, and then a few takeaways from it are very apt here. One is what Stan had just mentioned, and also like what David just said. I mean, like overall, like, do you want to be trading during this time type of thing? But Stan had mentioned this high liquidity up here, and it just doesn't budge. It doesn't go through it, and that's a good sign. However, like on this move, and maybe I start back at some of these other ones. Oh, there's so many things to comment on, but why don't we just stick with this one? We've got all this high liquidity up in here, and it trades, but there's still more buyers, right, above it. It comes back, it retests here, and does not find sellers try to take it through that. So that's a good sign. So we're still looking for this to go up, and it does. And then once we get, hold on a minute, once we get up here, like Stan had pointed out, this the seller's starting to come in, but now we trade back down to here, and we find sellers coming through. So this could be like your first stop someplace in here, right? Or your stop out of the market. A more aggressive one would be up through this liquidity here. If you see sellers below that here, you're out. You'll give up to the upside if it continues. But now, anyway, these are some considerations. But what does it do? It comes back down into high liquidity, high liquidity, high liquidity, all these areas in here. It trades, it doesn't go through, and then we start to find these buyers coming in, lifting it through here, and then it comes back up into these higher targets, or this high liquidity up in here. For me, this would have been a separate trade, but and then again, like if it trades, if it cannot trade, if it trades through this and you still see more selling pressure, I'm out. And worst case scenario would be I would take a small loss down here, or down in here someplace, or maybe it would be up at break even where this broke out from up here, something like that.
Okay, that's good. That's good. Thank you. That gives me something to work with in terms of where to put my stop.
Yeah, some considerations, but I mean, thinking about the liquidity and its transacting, and then how it retests or doesn't retest that area. What's the reaction after that liquidity is filled is really kind of the key. That can be helpful. But probably the most important point would be like David's point of like, the relative volume. Do you even want to partake? It's something to consider at least.
Yeah.
No, that's really good. Thank you.
And maybe the trading journal, if you would like to try multiple stop on sim, for example, to be able to put them into a few categories.
Yeah, that's something I'm got to do this weekend, is sit there and experiment with different stop levels.
So
or
Rob,
white stops.
there you go. I mean, use your you did the webinar on replay mode. Go back, replay this, look at it again, replay it, trade it, replay it again, trade it. What makes sense to you, and how do you want to protect yourself? Because like it's exactly, it is exactly days like this that is going to turn you into a better trader, because you're like, well, what did I do? Why did I let that happen? How could I? You're asking questions, and that's what the Academy is here for, is to help Also not just the coaches, I mean, the whole academy give feedback. And in this case, I think you got something to chew on here in terms of feedback.
Yeah, I definitely do. Hey, thank you, gents. Appreciate it.
Yeah, welcome, fella. Welcome.
Yeah, thank you. So I think we've got one more, David, and I don't want to leave you out. I know we've already gone over an hour and a half, but you've got it here.
We got CMJ, haven't we? He's
CMJ. Hold on a
currently
minute.
typing away.
Yeah.
Good stuff. If we get the mic to him, and I'm going to crudely and rudely say it's Team Tom. So, which is good, CMJ. So I love the post, love the trade. It's a trade. I think I said last week or the week before when we talked about this. It's a trade that I typically am actively taking as well. Particularly, this is towards the London close again, Bruce. I know I'm like the old broken record that goes on about that, but this is coming into London close where we get the shenanigans going on, the 180 and so forth. We see on the left-hand side of the chart, there's not a lot of volume driving that price down. We're getting to a particular level. It's an IB level and so forth. You then just quickly get that 180. The buyers come in, smash. There's a bit of sort of higher low. Jack would defend me on some of that there, and then the volume picks up, and off we go. We approach London close. I will hand over the mic in a mo because I'm going to pick up also on your point in the chat regarding scale. Were you? I'll leave the question. Were you aware that it's London close? Because as you know, this then went on. It went up to about 5,540 or so, and it went on at pace. Very much, I would say, driven by that London close. We came down. We tore some stops, and it went back up and tore, I think, well over 1,000 stops when it got to about 5,540 when I was glancing at my chart. But let's get the mic to you before I completely butcher this and you go, no, that's not what I was trying to do, David. Over to you, sir.
Can you hear me?
Yes.
I can, yeah. Welcome.
Okay. Yeah, this is a trade setup that we discuss in the Trader Labs on a daily basis, mostly valid on days that the market is trading in balance, and when it's a mean reversion trade. So I was watching the reaction when with the selling to the IB low.
Yeah,
I was watching the reaction. I've started marking. I guess you can see where buy stops at the bottom at 55.
Nice. Yeah, on the cloud notes.
Yeah, my cloud notes. So to help me keep an idea of where the fuel is and where buyers set their stops from the early buying and where sellers set their stops. And so once I saw it trade through the buy stops, it piqued my interest to look for a continuation. I was not expecting a continuation because it was a balanced trading day. And so I was watching the reaction. And once we got the initial push back up and retested the IB low and I noticed the exhaustion, I took entry with my stop right below the stop run.
Yeah.
For my for the trade, and so I scaled the risk neutral. I guess however wide the width of my stop, scaled the risk neutral, and I let it run. I got out in front of VPOC because I guess as the amount of contracts that we have, and I guess just from viewing this trade over a while and talking with Tom in the Trader Lab group, that trade is primarily targeted to test back to the mean, which is a VPOC. And so by me only having 2 contracts, I still struggle with should I give it room to see if it'll trade through VPOC or whether I will just close in front of VPOC. And just the way I have been watching the action of the day, I chose to get out in front of the return to VPOC. So I front ran it, got out in front of it. But then, like you say, you see it run, and you're like, maybe I should have gave it a chance.
Yeah, and my only tip on that is that time of day, knowing that you are approaching. It's not just London, everyone correct me. It's the European close, and Bruce comments on that on his sort of
Yeah, and I think
daily webbies.
that was another thing too. The European close, to me, it seems to slow down a lot, but it is a flurry right before it closes.
Yeah, it might be 4 days a week, 3 days a week. Today was a blinder. Today was an absolute blinder again. But some days, sure, it's crickets. Agreed.
Mm-hmm.
But being conscious that is coming up on your chart. And earlier on, Jack was talking to Bruce about getting some tweaks, so we can perhaps flag this up onto Bookmap, Bruce, or, as a reminder or a vertical line or something.
Yeah,
Bruce, thoughts?
I set a timer alarm on my phone.
Perfect.
For 11:30.
Yeah, I sort of do a CTA in spot gamma. Try to do it most days for guys in there, sort of 5-10 minutes before, and they often wonder what I'm banging on about. Today I prove my point. Bruce, what do you think, sir?
Let's see. This is it's an interesting one. It worked out really nicely. And there's not a whole lot to kind of look at and try to get feedback on, to be honest, from my point of view, at least. I mean, you have high liquidity getting filled on the way down. There's just a lot of supply. But it's kind of hard to see other context in here. What I really like, though, and what we do have is the way that you're trading it. And that is, you're looking at something very specific with your IB low. You're also looking for stops. So you're looking for these areas in here. Now, you do have like all of this high liquidity getting filled on the way down in this move. And like David said, here's your European close here, right? So here's your sell-off, but a lot of people buying. You've got other things in here in your criteria checklist. And then I really like what you said in here, the exhaustion. And then you're looking for those buyers to come in. You found them, and now you're looking for the move back up. So you have some things in here. And I like all of those things. It's just that I just don't see. Well, it's hard to see, I guess. Maybe you do see this kind of transition from this is sellers over to buyers here, and that's a good one. But is it just going to turn around and come right back down? At this point, it's kind of hard to know. But you've got your higher time frame. That's I think a key element on this one. And then you nailed it. You nailed that transition. You see the buyers come in, and then they're able to trade it right back into VWAP, your VPOC, etc. Yeah.
Yeah, great trading. Great trading. Yeah.
Stan, what any comments you have?
Well, I think you said everything. I don't know if you had post a trading journal on this trade or not, but I think that's a good thing to do it.
CMJ, are you there?
I'm here.
Oh, okay. So with regards to the trading journal, were you able to kind of
I did not take this one in the account that was connected to Bookmap. I have a couple of prop accounts, and so I switch throughout the day.
Okay.
And so this was taken in a different account.
And I mean, even like notes.
Yeah, I have it in Notion. Yes.
Yeah, perfect. Yeah, great. But yeah, you have it, and but you said everything about it. That's a great one. You took it. Even the volume was with you. You got your entry due to multiple confluences. Yeah, it would be even great to see one of your checklists and grade them.
Yeah.
But that's a good one.
Yeah, I agree. That's really good feedback, Stan.
Okay.
Yeah. I mean, these kinds of trades, like I know, like Crash, for example, trading the NQ, it zips into a level, and like he starts to hear that volume, but it's a higher time frame level for him, and then he's actually buying like some of this in this zone in here, and just giving it a shot. He's just kind of inching into it as kind of a feeler position, and then maybe entering more on the way out. But it has that kind of, I don't know, it just has that kind of falling knife look to me. Like I said though, you have your higher time frame studies, and that makes the big difference here, I feel.
Yeah. Plus that London close, and I keep saying it, Bruce, and to
European
unpack
close.
European, yeah, thanks. Unpack it a little bit more. Is that the price here is below the US Open? So not always, but those European traders that have been driving the market down short are going to square. Those institutional traders are going to close, and when they close, they're going to bring the price back up. And you saw it just, I know I said about 3 times so far. Look at the NQ chart for tonight or today into the US close. The price scooted down, 50, 60 handles, turned on a dime, and went back up 70 points, I should say, rather than handles for you guys, within as many seconds. So knowing that time of day, supporting your key levels lowers the risk on the traders from how I work, yeah.
Yeah, nice, good. Yeah, I mean, it's interesting, David. Like, I mean, you're just all over that, and you're looking for those little opportunities, because you'll know how to take advantage of it, and that's kind of really key, is knowing that behavior and then being able to take advantage of it.
Yeah, very much. Again, posts from today that I did on. If you look at gold and oil today. London opens 8 a.m., obviously middle of the night for you guys in New York. But oil went up $1 within quick sticks. Bidding across, you could see it. There's ICE action. It was a safe dollar trade, and that's decent money on oil. And so a similar story also. And I'm taking that trade because of the time of day as well as the order flow that I see on Bookmap.
Yeah.
I put my Notion journal sheet from the trade in the chat.
Perfect.
Yeah.
Well done, CMG.
Yeah, that's
good company with Tom.
Yeah, thank you, David. That's an idea. Like maybe because you're really good at that. Those little pockets of time of day, or like data coming out,
Definitely.
or whatever, and then very aggressive with the trade management, and that's your style.
It is,
and it works great. So,
it does. I think I posted it today towards one of the closes, but this is telling stories. But I started off with 1 or 2, Bruce. By the end of the run, I was holding 9 contracts.
Wow, nice.
And the only risk I took was the single contract getting in. The rest is history.
Nice.
It doesn't always work out like that. Don't get me wrong. We occasionally go home sore. Other days, no. You got to be aggressive. Scale like a whale, Jonah.
Yeah. Nice.
And this particular setup is only valid on days that the market is trading in balance.
Okay.
The IB failure. Well, as far as the Trader Lab, as far as going by based off of the Trader Lab,
60 years of experience of Tom. Yeah,
and just gathering the statistics for the trades that I take, because I don't take all of the Trader Lab setups. I just take the ones that I understand.
Yeah, that's
we all love Tom.
That's the key. All right, let's see. I think that's all you got, David.
I just had the one on the spreadsheet, so but we've run the
which is
down,
fine. I mean, we've almost gone 2 hours, and I was going to go over a few other people, but I have just one thing to just comment on, and I'm going to leave it at that. And that is SharkBlue. Just a shout out. some of he's going over his 1, 2, 3 pattern, and we covered it a bit in the webinar, but just he had a question about it, and so we're going through the order flow within the price structure, and he took multiple positions in here. And just nailed it. I mean, like, okay, now this is small time frame, but it does not matter. Like, the concepts are the same. So an entry here, an exit here, comes back to this area in here. He's entering again. It goes back and forth a bit. Enters at the high of the little swing here. Exits, I'm sorry. And you still got one position on. Let's see, or I'm sorry, I get a little confused on this one. Looks like the other one here, you're out and maybe in front of this high liquidity. Then you're back in. Looks like you take the stop here because you're afraid of this, but then you're re-entering back in here, and then back up into kind of in front of that high liquidity again. Back to the entry, high liquidity, in again. And then back up, but you exit on the way back down, looking that it might do this. But just by following your 1, 2, 3 pattern and the again liquidity and the volume within the in the structure. Just wanted to shout out, really good stuff. So we'll go over you guys. We'll go over you next time, Shark, and also we have a list here, short list to go through next time. Rubicon Trader, Valifan, let's see, Stephen Malak. We haven't had you on, but you've been in here, so looking forward to having you on the mic. And there's others, so I just wanted to let you guys know. Also, next Thursday is the U.S. holiday. Markets will be closed half day on Wednesday, and they will be fully closed on Thursday. So we're going to either move the webinar, or maybe we'll just take a holiday for next week. But we can further discuss it. See what you guys think. All right. All right, guys. Well, any last comments, Stan, Dave?
Thank everyone for their content. Really good. Really appreciate it, and thank you for putting up with my ramblings here in England. So no, it's great talking with everyone. Thank you.
Yeah, thank you everyone for posting. Thank you.
All right, thanks guys. Thanks coaches so much for the effort, and you guys, thank you so much for journaling, and then journaling your trading activity in here like this, so we can give you guys feedback. We really hope it helps. That's what we're here for, and to support each other and become better traders. Right? So
yeah.
Thank you all. Have a good rest of your week.
Cheers, guys. Nice weekend when it comes. Take care. Thanks, Bruce. Take care. Cheers. Bye-bye.
Bye.